Hello, good day. My name is Justin. I just want us to continue our analysis on gold. We saw what happened last week. We saw that the market was ranging throughout the week. Though if you know how to trade breakouts, you can be able to make some profits, little profits on trading it with 1 hour and 15 minutes, and equally possible 4 hours, but that will be on a small profit. So today we are going to be looking at what we are going to see. We are going to do some explanation. I'm going to do some explanation, and as we could see that being that last week was will I call it a week where investors deliberate and also check and balance reason why price was moving up. And also we could see that last week was also a week where investors digested the non-farm payroll, the GDP, and did some calculations on the data that came out from US. So right now, if we should go back to the chart that we normally use for this analysis, we can see that if we start with the monthly, we could see that nothing much happened last week. Looking at this now, you can see the three important support and resistance are still intact. We could also see that nothing much happened throughout last week, and we could see that we still have our engulfing. Okay, remember last 2 weeks it was the candle was like showing that it's an inside bar, but the next week gave us this, and this last week now gave us this candle now that is showing us that we are having an engulfing. And if you look at the engulfing now, we can equally say that the engulfing is engulfing two candles, which invariably we can say that that's a momentum for a very hot bullish candle that is coming. But looking at what we are having around and what investors are saying, we could equally say that there's a possibility that this candle, this engulfing that we are seeing here, which will close on Monday, this candle is going to close on Monday. So invariably, we don't know what will happen, being that investors are all saying that the US economy is getting better, that the GDP 2.9 shrinking of the economy was just a mere, a mere thing that happened, that they are expecting that US economy will grow with almost 2%. Some are saying 1.0, some are saying 0.1, some are saying, but the basic thing now is that everybody is expecting that US economy should grow in the second quarter, being that the first quarter shrunk, giving us minus 2.9. And if we should look at the data that helps to verify the GDP, we could see that job has been good since this month. And also, if we look at consumer index, you will see that people have gone back to the shops. People are getting back to the shops, and we could also see that the manufacturing data is also good. So we can equally say yes, U.S. economy is going to be better. But where I'm having an issue is because when we get our fundamentals, we also look at the charts, look at our technical analysis. And we all know that, yes, if investors should be blaming weather for the shrinking of the first quarter of U.S. economy, is there going to be a magic that will make minus 2.9 to turn to 3.0 or 0.1? Well, what I normally tell my clients and also people who follow me, I say, in everything that you get from your fundamentals, always remember that trend is your friend. And we can see from this pattern that we are seeing here now. Remember, we did this upper week. That was when we found out that we have a butterfly, a bullish butterfly, which the C has not complete. And we also found out that we have head and shoulder forming here, with the right hand, the right shoulder is still pending, but with what we are seeing here, we could say that the right shoulder is there's a possibility of this right shoulder completing. Now we are still talking on a monthly, and we have seen that the bulls are still currently still holding the market, though that fundamentals is telling us that we should be very careful. Okay, there's no much thing to be said here. We could see that 1320 has been the rock that is wedging price, and we saw that price was just dancing throughout last week along within this support and resistance, which is a very strong support and resistance. And what is it that makes it a strong support and resistance? We could see that we have a close support here, and you know that price respects mostly close support. And you can also equally see that we have shadow support here, we have shadow support here, we have shadow support. So you could see that the support along this area is a strong support. Now let's go to weekly. We don't have much to say here. We could see that the head and shoulder is still active, the bulls are still having the game, and there's only one thing now that we can say, that throughout that last week we saw that market was dancing within that 120, and this 120 now, this 1320 now, it is the rock of age that holds the price. And we could now see that last week has formed a reversal candle, that's giving us a reversal candle in weekly. And mind you that we have, this is a reversal candle, bearish reversal candle, which gave us a lower high. Okay, which gave us a lower high, which is also a down move. And now if you watch from here now, you see that this was a high, which gave us this high as a lower high, and price has been going down. Okay, so there's a possibility that even at this head and shoulder that is here forming, there's a possibility that since the trend of this price has been respecting this, Okay, if you watch, this is a high and this is a high, and if you watch that this high never beat this high, and you also see that it stopped at a very important support, and if you also watch, you see that it had a high which also failed. Okay, it came and gave a lower high which also failed, which now gave this lower high, though that this is higher than this. Okay, and giving us a downtrend. And now we are saying that being that we are suspecting that this is a head and shoulder, which gave us this neck. Okay, which gave us this neck. Not that it gave us this neck, but which we are expecting that this should be the neck with the right shoulder completing at this level. Okay, so but now we are seeing a hitch, that we're having something that is telling us, hey, we should wait and reason. Now we are seeing a reversal candle. Last week could not break 1320, and it gave us a reversal candle. So this reversal candle now is a very, very important candle to watch. There's a possibility that tomorrow market will open and we'll see price going up. Remember that every reversal candle that happens at a support, price always respects it. And remember also that, like I said last week, that anything that goes up must surely come down. And we know that this was a spike and has not given us 50% of this movement. Okay, so we shouldn't be in a hurry to start saying that this price, that we might not see a bearish move. And also mind you that our fundamentals is telling us that almost all the investors are expecting US economy to give us a good result this coming month. Okay, that the second quarter should be better because the job rates were okay, the consumers sentiments were okay. So we should be very, very careful, being that, you know, when investors start saying things are getting better, you will start seeing people will be panicking. Okay, people will be panicking. But for me, I will say we should trade what we see. For now, everything is pointing that the bulls are still active, but our pullback here will not determine. Remember that this is a reversal candle, and you know that whenever you get a reversal candle at the top, you should be expecting a pullback. So if price should eventually come beating this level 1290, okay, next place we should be watching price is 1277, which is now also our red flag. Remember, it is the place that I said if price should beat it and then break through 1242, that is the only when we can say that gold is now going bearish. But so far price is above this 1277. Price is heading to 1346 level, which is the neck. 1346 stroke 50 or 56 level, which is the neck of this head and shoulder. And whenever price hit there, that is when we cannot start thinking the possibility of price breaking out or price giving us the main reversal candle that will now tell us if price is heading to break 127. But so far this is still alive. This 127 is still alive, and price has not really shown that it cannot break this, because this is a doji with a small body. Okay, this is a doji with a small body, which price can equally respect and also disrespect. So we shouldn't start saying that price is going to hit 110 No, we should relax and wait and see what happens. This is a reversal candle, I accept, yes, and it is at a support. a very strong support. And if you can watch, whenever price hit that support, you see what happens. And look at, I can give you an example. This is a reversal candle now. Do you see what happened here? 127. Okay? Look at this reversal candle now, because I like using history to follow the future. Look at what happened there. You can see that this is a reversal candle. Okay? A bullish reversal candle. And now price now went up, respected this high, and gave another reversal candle and went down. And we saw that when price now went down, it gave us a reversal candle, which now pulled back, and look at what happened here. Okay? Look at what happened here. It respected it by consolidating at that level just about two weeks. Okay? Before it now breaks out. And now, look at what happened. And look at this. This is a reversal candle. Do you know that? This is a reversal candle. This gave us a reversal candle that told us that price is going to go down. But look at what happened. It turned and gave us a bullish reversal candle, and which now gave this price. So anything can happen. Anything can happen. You can't just come and say that price will go like as if we are for it. We are not for it. We are only mainly traders, and we follow what we see. So we shouldn't always be making assumptions. We shouldn't always be saying, I think it's going to fall. Don't think. Look at the chart and follow history. Make sure you use history to trade, because without history, we cannot be anywhere. So, looking at what we are seeing here, we should be expecting two things. If price should open jumping down, we should be expecting that, yes, if price should open jumping down, giving us a gap down, just look for a buying position. Yes, price will go down. Price will go down possibly to 1290, which will be our buying area. That is where I have been expecting to buy gold. That level is the level that I have been expecting to buy gold. So if price should eventually break 1290, then I will be on the sideline and wait and confirm what is happening. So right now we can say that if we should have a gap down, and remember, whenever you see a gap down, we have 80%. We are 80% sure that price will surely fight to cover it. Price will surely fight to go up to cover that gap. So invariably, we wait for price at 1290. When price hits 1290, we go to 4 hours and look for a reversal candle at that level. And when we get our reversal candle with a confirmed candle, with the confirm of that reversal candle, we placed our buy and then leave price to run. Okay, so now that's all about weekly. Before I go weekly, I would like us to see something at weekly on this plain chart. Okay, look at our weekly here. Mainly looking at this weekly now, you can see that there's a lot of moving averages, trend line, and I think that's all. Trend line. Okay. Now, what I want us to see at this chart is that, look at this trend line. Let me change the color. If you can look at this trend line now, you can see that price has been respecting it. Okay? Remember, I told us that when two shadows meet, we have our trend line. And you can see that this is the two places that met, and which gave us this straight trend line, right? And now look at where another shadow now meet the trend line. It gave us this trend line. Okay? Now, look at our head and shoulder. Remember that this is our neck, right? This is our neck. And now, look at price. Do you see that price breached this trend line? Price breached this trend line. Not minding that it's forming. Let's enhance it so that we can see what happened there. Okay, you see? Price breached it and closed below it. Now, leaving it as a whipsaw. And also, if you look at what happened here now, you see that these two MA, these two MA, EMA and SMA, this is 50 EMA, why this is 50 SMA. This is let me show you. This is simple moving average, 50 simple moving average. Why this is a simple exponential moving average. Okay, so looking at these two things now, you see that the EMA has crossed. Okay, the EMA has crossed, moving up, and now price came and turned it to be its support. Okay, then you see the SMA is below the price, showing you that it is a consolidation. Okay, now we also see that the trend line, price bridged it and formed and closed below it. And look at what happened here. Can you see something? Do you see that price closed above the close of the last candle? Price closed above the close of the last candle. So there are little detailed things we need to be getting in our trade. Like I keep on telling my group, we should study candle. Candle is one of the simplest things to study in FX. If you can study your candle, you will see that there are a lot of mistakes we do out of ignorance. Look at that close now. Look at that close. It's telling you that price is determined to still go up, but the momentum is not there. And now you see that people are having indecision level, because that's what that candle is telling us, indecision. So, and now the indecision now had to now form a reversal candle. There's a possibility that if candle should open tomorrow, it will give a gap down. And if it gives a gap down, what I can only do is, if I want, I can scalp and get a little profit at that down movement. Okay, I'll get a little profit at that movement, but I'll wait for my buy. I'll wait for my buy, because definitely if price should open next week and give us especially if it gives something like 5 or 10 gap down, man, I'll be expecting a spike later in the week. So the only thing I can only do now is, if you watch now, you see that this is 1290 something. There's a possibility that this might move to hit the movement down, giving it also a support. So there's a possibility that price might not even get to 290. There's a possibility that price might not get to 290. But the thing is that definitely, being that this is a reversal candle, it must be respected. There must be a pullback. Okay, there must be a pullback. And now I'm seeing this SMA to be the support. Okay, and price will now go back. If eventually it breaks this support, then 1290 is the next level. So we should be very careful. We should be very, very careful, because this EMA has crossed SMA in weekly charts. Okay, in weekly chart it has crossed, showing us that price ought to be going up. And also, if you look at the daily now, at weekly, look at the daily. This is 200 SMA. This is 200 SMA. Okay, simple moving average. This is 200, and you look at it, price. This shows that price is going down quite all right, but now we are having a consolidation here. So invariably, we should be expecting price to go up, but we should be very, very careful because of this reversal candle. Price will surely respect this reversal candle. Then if price should eventually break 290 and then go to 1277, then we should relax and wait for that break, for the movement down. Okay, for the movement down. And remember that I always say that I've been saying that for us to only believe that price is going to go down, 1242 price must break out through it. If price doesn't break out through it, we should still be expecting our price going up. But for the meantime, we can be scalping to make our profits. For people who are swing traders like me, should relax and confirm the price before they take their trade, so that you don't go and say, it's coming up again or it's coming down. So we relax to confirm our move. For now, the bulls still have it. The bulls are still strong, head and shoulder, except if this should break 142, 1242 should break. That is when we'll now start saying, yes, possibility of price going down. Okay, so we should not neglect this space here. Look at this space here now. We should not neglect it. It's a very, very vital thing to watch, because possibility of price might even open tomorrow. If price eventually open tomorrow and give a gap up and hit this level, we should be expecting a spike down, because this candle now will now be telling the next candle, what do you think you are doing? When you get to that place, I am here waiting for you. So the best thing is, when you see a gap up and price start pushing up, please be very careful. You can still make your profit, but be very careful, because if price should have a gap here, I wouldn't think that it will break this neck. So if it hits the neck, there's a possibility of it having a sharp movement down, because it will respect this candle. Okay, now let's go back to our chart. So now we have seen weekly. Let's look at daily. As we can see now, the daily, remember that this is a down trend, a down channel, which price has broken out from. And if you also watch here now, we have 250 SMAs, and look at price. Like I've been hammering, it has been fighting to cross. If 50 should cross above it, forget it. Possible of price hitting this level. Okay, if 50 should cross, but for now, if I should enhance it, you can see that it is still fighting to touch. So, and also, if you look at this now, you can see that if you look at the chart, if you look at the candle, you can see that. Let me remove this so that we can see clearly. Okay, if you look at this now, you can see that the reversal candle here is in between this high and 1320, and you see that price is dancing inside it, which now is inside. All these candles now are all inside this candle. Okay, which is telling us that price is definitely going to respect it, but anything can happen. We are not forex, we are only traders. What we should focus on is what are the fundamentals telling us, and what is our technical analysis. What is the technical telling us? So what I'm saying in effect is that by Monday we should be very careful. We shouldn't rush in. We should wait, being that this is the range now. This is the range at this level and at this level, 1325 and 1306 is the range. Price has been moving, and if you watch the range, you see that there's a very strong support and a very strong high at that level. So you see that both of them are the things pulling down price, up and down, indecision. So we should relax and wait for price to confirm. Remember, this is the kind of thing we had in at this level. If you can remember, this is just this thing that is happening here now is the same thing that is happening here, indecision, before market now decided its level. Okay, indecision. Look at it, a reversal candle. Okay, if you trade with history, you will see that this is a reversal candle, this is a reversal candle. Now price could not break above the close. Okay, look at this also, price could not break above the close, and you see what happened. Okay, so you can see the consolidation here and see the consolidation building up here. So with this now, there's one thing people say, which is almost 50% correct. They say whenever you see a consolidation up, know that price is getting a momentum to continue the up. When you see a consolidation down, price is building a momentum to continue the market down. But here now, we cannot say that because this is a sharp move. But it can still happen. It can still happen because we've not seen really what is going to pull this price down. Not minding what investors are saying about US economy. Yes, US economy is getting better. Yes, US economy, the second quarter, the jobs were good and everything, that they are expecting growth. Okay? I'm not doubting that. I'm not saying no. But what I know is, if I'm looking at this now, I'm expecting a 50% retracement, which is supposed to close at 290. Whereby 290 is broken, that is when I will now start looking at 1270 and saying, is price going to go down? But for now, we still concentrate on this. But I'm expecting something down here. So we should be very careful. We should be very careful. Throughout last week, what I traded was breakout. And I made cool profit on that. So we should be very careful. And please, if you've not gotten the breakout system coaching video, please try and get it so that you can follow us in enjoying some profits. You don't necessarily need to be waiting for 100 pips. You can be making 20, 30, 50, 60, and you're meeting your weekly targets. Okay? Don't go and place trade and expect that it's going to give you 600 pips. It's going to give you 500 pips when you know that indecision is what is at hand right now. So we should be very careful and always follow what we see, trade what we see, and don't trade what we think. Okay? So let's go to 4 hours so that we can see clearly. You can see here now that you can see here that we are having consolidation. Remember that our ABC is about to complete its move up. Okay? 1330 is the high of our ABC, our ABCD. So we are expecting price to hit this level. That is when we'll be now talking about maybe possibility of going down. But for now, either possibility of going down or continuing up. So for now, we should be very careful. Look at what we saw throughout the week is consolidation. And remember that the pullback has not yet done. Okay? So we should be expecting something to happen here. Mean that what we're having is consolidation, and mean that there's a possibility of us having a gap up. Also, there's a possibility of us having a gap down. So if you have a gap up and price should continue and beat this price and beat this level or hit this level, we should be expecting a spike down, because it will now give us what we call a divergence. Because if price should hit here, let me show us what I'm trying to say. If price should hit this level, we should be getting something like this. Okay, let's assume that price hit here. We should be getting something like this. You see that this is a divergence. Which invariably could form a reversal candle here and give us a spike down. So we should be very, very careful. Very, very careful. We should be very careful and have a lot of patience. Thank you.